Amazing. Hadley, you are live. Here is the star of the show. Wonderful. Welcome everyone who is jumping in right now. I've just chucked in the chat right below. Is just let me know, where are you guys tuning in from? I'm here in Auckland. Hadley, where are you tuning in from?
Tuning in from Whangarei, so it'd be good to hear from you guys and where you're at. And yeah, don't be shy.
No, that's exactly it. Grab your cup of tea if you need as well. Get yourself strapped in. We're going to have a really good power hour ahead of us. Hadley and I are super excited to go through this webinar with you, just to share all our tips, tricks, experiences, so it can really boost and level you guys up in your property game as well. Amazing. So as attendees, everyone's jumping in. Incredible.
Just give it a few minutes just to let some more people come in, and then we'll get cracking into it.
Oh, amazing.
The chat bar, guys, is on should be on your right hand side. Don't be shy. If you can, like they said, if you can put in where you're from, and yeah, get a bit of conversation going that way, and then in a couple of minutes we'll get the ball rolling properly.
Cool. At the same time as well, we've got a couple polls. So this is a very interactive, just so you guys can capitalize on all the learning. So I'm going to chuck a poll up right now and start it. And the question is, have you completed a renovation on your investment property or own home before? Simple yes, no. I will publish that, and I'll also display the results so everyone can see where we sit on a percentage.
Cool. Jeff's joining us in I hope you're on holiday, Jeff, in London and not working. But morning to you over there, and Christoph from New Plymouth. Great to see you on the call, Christoph. I think we spoke the other week, so that's awesome.
Amazing. Cool. We got a few yeses coming in as well. 60% yes, 40% no on renovations. Oh, it's evening out.
These things change quick.
They do. And it's cool because we are going to share a part of our journey, especially from our perspective. So not only do we help a lot of clients through this renovation process, but we've also, what's it called? Walk the talk. We've got our hands dirty. So we're quite excited as well just to share our personal story, get you guys involved in that too. So cool. We got 61% who have completed a renovation. Fun. Cool. While that is ticking up, what I'll do is I'm going to share the slides and we will get cracking tonight because we have an hour ahead of us. And I will hit start. Amazing. Hadley, you can see my screen there?
Hold up.
Pardon?
Yeah, I can see it.
Okay, wonderful. So welcome in tonight, everyone. This is all about maximizing your ROI, your renovation strategies for property investors. So we're super stoked to be on this tonight. I think this is my passion. And my purpose is renovation. So I cannot wait to kind of share our side of the story, as I said before. And Hadley, this basically starts with you from investing through to project management, through to property management. Cool. So a little bit of housekeeping before we get started. So if you don't ask the questions, you don't know. So we want to encourage you guys to ask those questions. Also, at the end, we will open this up to a live Q&A. And that will basically just help us at the end answer any of your questions that you got going on, and it might actually help everyone else. So please don't be shy, do ask, and we have got that time at the end for Q&A, those questions. The last part as well is we always love to offer people an opportunity to expand their portfolio. So this isn't going to be a surprise in the midway. We're also offering content afterwards that too. So just so you guys are aware, those that are ready and keen to get going, that opportunity could be for you. But if you're just here to get a ton of value, you will also gain a lot of little golden nuggets from us and little tips and tricks, especially things you can avoid. So yeah, just want to keep that transparent on that side. Awesome. Also, by the way, at the end of this webinar, so Hadley and I, we sat down and we discussed what do we want everyone to get out of this webinar. It's so super important that we utilize your time. We don't want to waste your time. We want to make sure this is so impactful for you. So by the end of this webinar, you'll discover the critical factors that can make or break your renovation ROI and learn actionable strategies to maximize your returns. So that there at the end of this webinar is what you will receive. So yeah, we're super excited to get into it. Sweet. So before we do that, I better introduce myself. My name is Tanay Smith. I'm the brand and marketing director for New Zealand Property Buyers. My role in this webinar tonight is to basically be the MC and the host. And obviously Hadley's here as the expert. So I'll bring him in questions and in situations, basically each slide, depending where he can fall in. So yeah, I'm not the expert, but I'm only passionate about it. Hadley's our expert, so we will definitely bring him in more. Hadley, I will pass it over to the man himself. Hadley, please introduce yourself, share your story, and also why you do what you do.
Awesome. Thanks, Nate. Evening, everyone. Great to see everyone here. So a little bit about me. I started my property journey back in 2006, 2007. Probably a little bit similar to the times that we've just come through, where around that time, everyone was saying that property was never going to be as cheap as what it was then, and prices were going through the roof, and people were piling in, and interest rates were low. And then we sort of rolled over. So I got in at that point, bought a property that was that we overpaid for, know what it's like to have to top up each and every week. And then sort of 2008, 2009 happened, where prices dropped, unemployment went up, cash flows got tight. So lived through that. And then back in 2015, came out of the situation at about break even, and then thought to myself, hey, look, there's got to be a better way of doing this. So went in and got myself educated, started to purchase some properties, and then at the same time realized that there was a bit of a gap in the market where there was people that were going out that didn't sort of quite understand the buying process, what to look for, what a good investment property look for. So then that's when we started the New Zealand Property Buyers Company. And then from that, with clients, they've said to us, hey, look, over time, we want you to help us out with the project management. So that's something that we've started. And then also too with the property management. So we sort of offer everything from start to finish. But I think the renovation part's the really exciting part with this, in terms of, how do we increase our cash flow? How do we increase our equity? And what does that look like going forward? And what returns should we sort of be expecting and looking for as we go?
Amazing, amazing. I cannot wait to share our little tips, tricks, and secrets. And saying that, what we'll do right now is actually share a bit of our personal story. So we have purchased our home, and our home, we kind of set a goal for ourselves to do a complete renovation on a property. So we got our hands dirty. So we know what it's like to not only coach clients through the process and do it for them, but we now know what it feels like to also be the people to renovate a house. So this was super exciting. We took our property here, which was a 3-bedroom, 1-bathroom, and we turned it into a 4-bedroom, 2 bathrooms with one being an ensuite. So instantly there, we'll share the numbers later on as the case studies, just to show you guys those numbers. But this here was like something that, again, we lived in this mess, but it was something we had so much fun in putting together. So yeah, Hadley, have you got any other comments on our amazing renovation journey?
Just on a pro tip, on the left-hand side there, under the after, you can see the white roof with the streaks of paint.
Oh, yes.
So what that is, guys, is decided to paint a roof in winter, when we thought we had half a chance. And it turns out that if it's below 10 degrees, the paint doesn't stick particularly well to the roof. So that was painted, looked absolutely amazing, and then came out the next morning to find that all the paint had run off into the gutter. So first tip of the night: don't paint a roof when it's cold, and even better, get someone else to do it.
Yeah, I agree. Awesome. So what we're going to do is just go over today's topic. So the key components of what we want to cover tonight, so you can take away, is the roadmap checklist, renovation roadmap checklist, the renovation outcomes, the living proof, which is our case studies, and then effective property management, which is super important when you're pulling those levers and improving the performance of your property. So we'll kickstart now into the renovation roadmap checklist. I will bring, so for this one here, what I guess the 3 key core components is timeline, budget, and a trusted team. To us, and we sat down as a team, we kind of discussed, what are those 3 main core factors just to create a solid foundation for you before you start renovating. What do you need? There's that saying, a piss poor plan leads to poor preparation. So yeah, this one here is just super important. These three key points. So timeline, budget, and a trusted team. Hadley, what do you think of this?
Yeah, no, 100%. If you haven't got a timeline in place, then there's no budget to follow because you're not knowing what your costs are going to be, if they're going to overrun. And then that also leads into your trusted team as well. If you haven't got the team behind you that's driving what you're looking to do, then the chances of things going AWOL are fairly high. So those three things are extremely important. Although some of them, the timeline might sound a bit trivial, it's probably one of the most important things to check that you're on track, because budgets get blown when timelines get blown.
Absolutely. Yeah, for sure. We'll break it down step by step now. So we want to touch on the timeline perspective. So the team, our senior team, project management, we look at these three things when we take on a timeline. And it's looking at the minor, the medium, and the major renovations, and each have a time frame to basically suit that. Hadley, do you want to just discuss a little bit more in depth about a timeline and how we structure that so everyone's expectations fit within it?
Yeah, so in terms of like minor renovations, we look at things like healthy homes, maybe some carpet, but nothing too substantial. And we'd sort of look for a turnaround of that, sort of around a couple of weeks, maybe up to sort of 3 at a push. Those medium renovation times sort of go from 3 to 6 weeks. And that's stuff like carpet, paint, new kitchen, new bathroom, where we're not undertaking a massive project, but it's just going to take that little bit longer. And then those major projects come into things like full bathroom replacements, adding in additional bedrooms into a house, something that's going to take sort of longer than 6 weeks. And then with those sort of different levels, what we need to look at is how does that fit into the timeline? And then the budget from that is we need to allow for those holding costs as well, because that's one of the things I don't think enough people sort of take into account is how long is this going to take and what's it going to cost me above the your normal sort of budget cost for what the renovations are.
Amazing. Yeah, nailed everything on the head there, which then kind of leads beautifully into the budget. Because I know our clients care so much about the budget because it's all about ROI. We want to make sure we're staying in between that. Our team is KPI'd on those two factors, timeline and budget. And I think the way that we've been able to do this and keep our clients' expectations quite lean is by adding in a contingency. I think that's been the best kind of strategy we've put in for our clients and setting that expectation and just making sure that, that contingency budget is there. So, Hadley, can you share an experience or something where the contingency budget has been actually like worked in our favor here?
Yeah, I think with every project you go into, you need to have that contingency there. The thing with purchasing older properties is that you get the building report, you have a look, everything looks good, and then you pull a wall down and find out that when the jib looked good, what's behind the wall can be a different thing. So we've had a recent project where we had a contingency plan in place. We needed to pull the bathroom out, do a new bathroom. The underneath of the house had a really low subfloor, so we couldn't crawl under and have a good look. So what happened was bathroom came out. We were just thought we were just going to replace it. Turned out that the floor joists all underneath the bath had rotten out. So our initial plan of the budget for the place got obviously blown out because it was extra work. But that contingency plan in there was the buffer that we needed. So no one was sort of pulling hair out trying to find extra money at the 11th hour to cover that. So going in with your initial budget, then adding 10 to 20% on top is something there as a safe net for you.
It would stop the stress and the hair pulling out, right?
Yeah.
Amazing. Cool. So we jump now into everything that makes it happen, which is your trusted team. So timeline and budget is important, but the people to execute your vision is going to be your trusted team. So we may play an element within your trusted team, but if you're going out and you're finding contractors and builders, there's a few things that you need to check for. And these are just like, I guess they seem quite like self-explanatory, but when you kind of lay it out, it makes sense. So, because there's so many people out in a region that you're trying to find to help work on your renovation. So the first thing here is communication. Are they great at communicating? Are they quite timely? Availability. There's no point in bringing someone on if they're not going to start for another 6 to 12 months. So time, making sure they fit within your time and your budget, setting those expectations is so key and so super important. We get that a lot within, and we've built the proper, I guess, our main relationships with our contractors, that they prioritize us over everyone else. So that's where you want to be. You want to be in the position where they prioritize you and the work that's needed to be done. Third point there is workmanship. There's no point in getting a guy in, giving him a job, and then figuring out that he can't do the job. That is the worst. And so, yeah, those three there are the most important. And then pricing is the last one. Hadley, I'll let you kind of run with the quote.
Yeah, so in terms of the pricing side of things, is the old adage of cheap isn't always good and good isn't always cheap. So just to sort of touch again on what Tanay was saying about workmanship and things like that, there's been a few conversations that I've had lately about people that have just gone in to go, I'll get the handyman to do this, I'll save a bit on a builder, and then the handyman's gone and done the work, and then they've got to get the builder to come back in to fix the handyman's stuff up in the first place. So really important that when we get our pricing and when we're selecting our people, that they're the right people for the right job, as opposed to sort of a generalist that can do a little bit of everything for you. And then if there's any issues later on down the track, you've got some recourse for that. It's not just Jim the handyman that has decided he's a roofer today, he's a plumber tomorrow, and an electrician the day after. It's really important that we're getting the right people for the right job, and that they're delivering on so what you'd expect those people to deliver on.
Absolutely. And I guess one of those key points as well with the trades is getting those progression photos. So our team are very vigilant, and this is what we would recommend, is just getting those progression photos. If your project is a major and it's quite long, those weekly progression updates, and set that at the start as the expectation, is what is going to give you the confidence in the person doing the job, but also your timeline staying on track. If someone kind of falls off and they're not there, such as the carpet person, then that blows out your timeline by a week, because you need that in first before you do X, Y, and Z. It's just a complete nightmare. So it is so, so, so important to get those progression updates. Depending on the level and scope of work, it can be weekly, it can be fortnightly, just making sure you're getting that progression update. I think that's been one of our hot tips from our project manager and what she's put in place. Last key point. This one here is a bit of a celebrate. We want to give this as a bonus. Doing a renovation is not easy. So when we work with our clients, we do a little celebration. So it's just an overview of the scope of work, basically your budget, your timeline, making sure we fit in with that. And then those cool before and after photos. There is my most favorite part. It is that reward. The reward satisfaction. It's like, yeah, we did it. This is what it looked like before, and this is what it looks like after. And we got some cool before and afters to show you as well. So yeah, just a little celebration. Get the champagne out, clink the glasses, and do celebrate. Cool. Now, Hadley, I'm bringing you in as the expert for the renovation outcome. Of course, renovation's one component, as we spoke about the foundation, but there's going to be a few things that actually maximize the ROI. So this here's your field and your specialty. So I will hand this over to you to talk about investment strategies.
Cool. So thanks, Tanay. So going into this, it's really important that when we're looking at our investment strategy, we've got to go with the end in mind and then work our way backwards. So when we're starting to look at property, we want to have a look at our strategy, then our area, then our property is the last thing. When we're going into the renovation project, we need to work out that the end first rather than the start. So, what does the vision look like? Who are we trying to attract? Are we trying to increase our equity? Are we trying to increase our cash flow? Are we trying to do both? So having that sort of key focus to then work out what we're going to do is the really important thing with that. So the questions that you really need to ask yourself while you're going through is this renovation that I'm doing going to increase my rent? And if it is going to increase my rent, by how much? So may seem like a trivial thing, but it's going to be one of the things that will stop you overcapitalizing on a particular property. And then the second thing is that will this property or will this renovation put me in a better position to purchase the next one? So one of the things that we see a lot is people will go and say that they've got a house, the kitchen in it's good, it's an old 1970s kitchen, the cupboards are just a bit tired, and they'll go and they'll rip the whole kitchen out and then put a brand new kitchen back in, rather than just maybe putting a new bench top on and putting some door handles on that. Because the difference between it is, if we were just to try and increase cash flow, then the touch up of the existing kitchen is the way to go, because you're not going to get a whole lot more rent by putting in a brand new kitchen. Tenants expect a kitchen, or people expect a kitchen. It's just the quality of it. But if we were looking to increase our equity, then the second option would be the way to go for it. We're gonna have a little bit of an increase in equity as we go with tidying the cupboards up, but probably not quite to the same extent as the second.
Amazing. Before you hit to the next slide there, Mr. Nightingale, I will quickly jump into the poll. We also have another poll here that would be really interesting to hear from everyone here, which is how many investment properties do you currently own? So I'm just going to publish the poll now. So it'd be really, really fascinating to kind of see where everyone's at, and then we can also cater the conversation around that level. So please jump in, pop into the poll and just enter in where you sit. If you sit within none, but I'm ready to purchase, or you're a homeowner, that's also us. We would click on homeowner. Investment properties anywhere between 1 and 2. You've got or investment properties between 3 to 4, or you've got 4 and more investment properties. So Hadley, from your experience, I guess the type of clients you work with, they start on the journey where they haven't got a portfolio. Is that correct? And then you build them up and they get to that end outcome.
Bit of both. Some people come to us with no properties at all, and we help them develop that from scratch. Others have got 4+, and then don't have the time and the inclination to go out and look. So come to us to help them go and build their portfolio out further. I mean, the main thing is just having the right mindset to go and seek those opportunities.
Absolutely, mindset's everything, isn't it?
100%.
Yeah, cool, awesome. We're getting some answers here, which is wicked. So we've got a few people here, 28% who have not purchased yet, but you are ready. Whoop, whoop. We've got our homeowners. We're in that category. We've got our 1 to 2 investment properties. Woohoo! We also have 57% there. And then we've got our 3 to 4, 7%. So that's amazing, because no matter where you're at on that scale, this is going to help you. So even if you're at the starting phase or you're a pro investor, it is really going to help you guys shift the needle no matter what scale. So this is wicked. Cool. So Hadley, I will hand it back over to you to continue inspiring.
Awesome. So yeah, I mean, the things that we need to consider when we're looking at properties, and we're looking at mainly the renovation side of things, after we've had a building report or we've been to look at the property, the things that we need to stay away from are things like re-roofing. If the roof's completely shot and we need to replace the whole thing, there's no real dollar for dollar reward for it. When you go and buy a house, people expect there to be a roof. You don't get another $100,000 because the roof's amazing from an average roof on there. The same with repiling and any sort of foundation work. Especially when you're starting out, it's generally costs more than what you think and takes a whole lot longer than what you think as well. So anything to do with piling is also to do with the council, and then doors that used to open and shut quite easily don't open and shut quite as well as what they used to. Jib cracks, windows don't open and close, and it can generally lead on to a whole lot of issues. And then the same with the structural work as well. So anything where we're needing consents for the building work that we're doing, we generally try and stay away from in the initial phases anyway. And then once you've got a bit of a portfolio together, you can start to take a few more risks. But in the initial stages and getting yourself started, it's really important that we're just sticking to the base fundamentals of what we're doing.
Oh.
So what we're looking for in a property and to generate some more income and generate some more equity is there land that we can develop, that we can go and put another building on, that we can develop at a later stage and we just hold it. The cosmetic upgrades are the really important ones. So things like paint, carpet, they're still the best dollar return over anything else. And I suppose you know that yourself when you walk into a house and you put your feet on fresh carpet. It feels a whole lot more homely than when you walk into a property that's been tenanted for the last 20 years and you sort of don't really want to take your shoes off. So those things just to brighten up the house, make it look a whole lot more attractive to people is really important. Then there's the conversion side of things with the garage, a self-contained unit. Is there a space in the house where you can convert a garage into a sleep out legally? And I suppose that's the thing to preface is it's always got to be done legally. There's too many risks or downside not to do it that way. And then the value add in terms of the additional room. So is there a lounge that we can add another bedroom into so that we're not making the lounge too small, but we're also maximizing our return on investment through that as well. So always thinking when we're looking at a place, what is it that we can do? How can we restructure this? But then also too, who's the end user going to be? And what are we trying to achieve here? Are we trying to achieve yield or are we trying to achieve our equity increase?
I guess that kind of the example also sits with what we're currently looking at an investment property. And we walked in and the first thing I thought is how can we turn this into a 3-bedroom? Of course, I love a renovation. Why not smash down a few walls? So I brought the builder in. We did a walk around. He did a quick measure up and literally said, this is too hard. And he said, your best bet to basically turn this property into a money-making machine, so it's in the positive scale, is to convert the garage into a self-contained unit. So sometimes there's opportunity where you think it might be, but it might also shift. So that's what we're currently discovering and going through right now. So we're in the same boat as everyone else.
Cool. So we've got some living proof or living case studies I just want to walk you guys through as well in terms of some of the stuff that we've done recently, and then just the strategy and the ideas behind them as to what the thinking was. So this initial property here on the left hand side is obviously the befores, the right hand side's after. The smell of this place was horrific when we first walked into it. So this was a client that bought the property by himself, came to us and said, hey, look, can you project manage the whole thing for us? So it's been repainted, recarpeted. Obviously the kitchen was horrific. So the kitchen came out. And then what we were able to do was the property was renting for $420 a week before the renovation, $600 a week after. So we're looking at $180 a week increase. And the total renovation, obviously this is only 2 photos, but if you can imagine the left ones, what the rest of the house looked like. So we went through total reno cost was up to $80,000. There were also some other units on the property that included as well. But we were looking at an 11% or 11.7% return on investment for the money that was put into it. So also too really important just to remember as a general rule of thumb that you want to sort of get a minimum of 10% return on your money for when you go in and do a renovation. So if we're looking at spending, say, or getting an increase of say $50 a week, the most that we're going to want to spend on the property is about $25,000 at the top end. About 17.5 is about a 15% return. But that's sort of the brief or the guidelines that we should be looking at to maximizing that money. Anything lower than that, you're better off just not to do it because you're starting to overcapitalize. Mm-hmm. In terms of this particular property here, Vivian's seen the army. So in terms of the second one here, this is a client that we managed. We manage her property. She owns both of them, and we were looking at how we can maximize the current space that she's got, and especially with the government bringing in the 60 square meter rule or talking about it anyway, and potentially coming into play next year, is going to be super handy for this type of thing, so that it's going to bring the cost down and time down as well. So this one here, you can see that she had the entire section. And then what we've done is we've gone in and got a house that we can put out the back. And that was just the best product for the size of the section. So important to look at the overview of the section, then work out what's going to work in best. So before there was obviously zero rent, and then we've gone in and we're getting $550 a week for that particular property. The total cost in that for everything finished was $1,212,000. Which may seem like a lot for that $500 a week, or 550, sorry. But the other thing with this too is that at a later stage, if you decided that you were going to redevelop the section or do something else, because your minor dwellings, made to be transported, you can actually pick it up and shift it to another block of land to then go and increase your cash flow, but you haven't got the same initial purchase cost to purchase the building. So from that one, we're looking at sort of 13.5% return on money invested, which has worked out really well.
I guess because she owns both of them as well, the two in the middle, and then she's also added another one, it kind of helps her with her cash flow.
Yeah, 100%. It's just maximizing everything that she's got there. So then on to this one here. This is the one that Tanay touched on earlier, the one that we did. So initially when we bought the house was 3-bedroom, 1 bathroom. We then went and converted. Well, we got a few builders, and I think this is where it comes back to the thing of making sure you have the right people on your team and the right people that can help you out. We had 2 people that came and viewed the house. Didn't pull a tape measure out, just looked and went, that'll cost you about 60 grand. And then you'll have to go and see an architect. You're going to have to go to council, get building consent, and then get an engineer's report, and the list went on. And they're like, it's probably going to cost you close to sort of 70 or 80 grand for it. Obviously a little bit of elbow grease with us doing some of the demolition stuff with it being our own place. But we found another guy that said, look, I've done heaps of these before. The awesome thing in Whangarei is that we can do what they call an exemption. So there's exempt works where you don't need to go through the building consent process. You need someone to draw the plans up for you. But you're not in a position where you've got to run all the way through the council from a building consent, architect, etc. So the cost for the exemption was like $550 as opposed to sort of $3,000. And we didn't have to wait. We could do the work as we went, as long as it was documented. And that just, I suppose, really goes to show the importance of having the right people on your team. The other thing with this place too is that you'll see the purchase price there is $580,000. We purchased that in November of 2021. So anyone that remembers, that was absolute height of the market before the triple CFA regulations came in and prices dropped away fairly quickly. So it just goes to show that if you're thinking about what you're doing, there's never a bad time to purchase. We obviously purchased that at the peak of the market. We've just had it reappraised at $700 to $750. We've spent obviously a little bit more than the $38,000 on it, but we're not in a case where we're upside down and overcapitalized. So it's important to look at things and think about, where am I putting my money strategically, rather than just sort of jumping in and putting your money into anything.
I guess the key point there as well, we looked at this and we saw on market rent, because that's also, you get a quick research of what's going for rent at the moment. As a 3-bedroom was $590. And I think once we transferred it into a 4-bedroom, now we're up to the $720. So even that in itself, Hadley, for rent is incredible, right?
Yeah, it makes a big difference. And then when you look back on your ROI, it's well worth the time and the effort to do it.
Awesome. Yeah, perfect. I guess I got one last question that we discussed before, and I guess we talked about the exemption process, but what happens if we didn't get this exempt? What would be the impact behind this?
If we didn't do it legally and just thought, it'll be sweet, no one's going to find out.
Cowboy it ourselves. Yep.
The issue that you run into is the insurance issue. You go to on-sell the property, same thing again. People get the council files and go, great. You've got the plan show a toilet in here. but now there's a toilet and a shower and the door's closed off. How did that all happen? So once again, it's just not worth running the risk of trying to do stuff on the cheap and hoping to come out right. Because, you know, when you come to sell a place in the end, and some people say, look, I'm never going to sell. But we've just actually sat down with some clients last week and went through their portfolio. And it actually turns out the property they bought in 2005 is better off to be on the market and sold, because it's sort of run its race with the equity side of things. And for a $1.5 million property returning $800 a week, they're better off to go and buy another $1.5 million property that's high yielding, that's a couple of $1,000s a week or $2,500 a week, to give them a better return on their money.
Yeah, perfect.
Cool. So the property game plan and strategy session. So this is just the offer that Tanay talked about earlier. I just want to quickly run through this with you guys and what's involved, and then we'll carry on with some more content after this in the Q&A. So what this is just a 60-minute strategy session online with myself. What we'll do is we'll go through where you're at the moment, what your portfolio looks like, what it is that we need to do to get you to where your goals are, reassess some of those things, such as, like we said before, have you got some more properties that aren't probably performing as well as they should? And then what do we need to do to get you to your end goal? And then give you some ideas around steps that you can take to further progress that. So that's there's a couple options there. There's the QR code, which is on the screen now, and you can take a photo of that on your phone. The other option is the offer tab on the right-hand side. And that's we normally do those sessions for $897. And then tonight we've got them down to $297 for the first 5 people that jump on that and click on the link. You'll be there before it goes back up to the higher price. So yeah, be really good to chat with as many of you as interested, and we'll nut out a game plan for you.
Awesome. Vivian asked a good question. She kind of wanted to just know more about the renovation services. And I think that's a good conversation to have, especially if you kind of want to dip your toe in the water with working with our team. We're all a big fat family team here at the moment. So we work from investment through to renovation, through to property management. And the important factor around that is we work with our buyers from the start to the end. And we literally have your best interest in mind, because we are thinking from an investor's mindset. So it's not that we are project managers and we're spending your money without intent. We are project managers with intention, knowing your budget, your time frame, and understanding the importance of getting it from renovated to on the market to rented. So that is basically our KPIs that we run on. Our renovation service is basically from, as we said before, the minor, the medium, the majors, but we also specialize in the subdivisions, installing minor dwellings, as you saw. And anything else I missed in our renovation service?
No, it's most of the, I think you covered that fairly well. If the projects get too big in terms of like multi-dwelling subdivision and development, then we've got other people that we refer out to and working with. So it's just about, like you say, having that team that's got your back and pushing you in the right direction.
Amazing.
Cool. So just a couple of testimonials from recent clients that have come through with our service. Leanne says that she's so fortunate to have found us, and she's a lovely lady. Raquel, with engaging us, has given them exactly what they needed, and they highly recommend us, which is phenomenal. Jeremy and Amy also. So these guys are clients that we've worked with them for a long time. And just great people. I see Hazel there has said, can you support projects in the regions? Yeah, so Hazel, most of the stuff we do is regional and out of Auckland. We've got people that are based in the Hawke's Bay, the Manawatu, and Gisborne, other regions as well. So reach out to the email address that sent you the link tonight, and we can fill you in with some more details. Cool. So the last thing that we wanted to touch on here is effective property management. So this is sort of the thing where I think a lot of people get themselves stuck, and as a bit of a side note, is to how are we managing our properties and what's happening to them to get the best results from them. So things that we find that people do that are ineffective and don't get the best results for themselves is they're really hesitant to increase rent due to the fear of losing tenants. Now, that might be a little bit the case of it finding it harder to find tenants at the moment. But what generally happens is when people get themselves into this mindset is that they find themselves 3-4 years down the track where they've got people renting their house at $350 a week, but the market rent for the property is at $500. So they're losing $150 a week by fear of losing tenant. They struggle to view their property as an investment and see it as their house or somewhere that they live in. And that's sort of something that we really like. We really try and talk to people about is, hey, the place has got to be nice. It's got to be livable, but it's not a place that you're going to go and specifically live yourself. So let's make it warm. Let's make it healthy homes compliant. Let's do all the things that we need to do. But at the same time, we also need to make sure that we're making wise decisions in what we're doing. Ineffective people tend to manage the properties themselves without huge amounts of knowledge into what the regulations are, what they need to do, how they need to go about things. It just tends to be more of, right, I just need to save myself 9%. And then that's going to be the thing for me, because that's where my margin sits. And then they don't look at what the potential costs of that could be. So as we touched on before, becoming emotionally attached to the property and that influencing their decisions. So being close to your tenants, it's great to have nice tenants, great to have a bit of a relationship with them, but we've seen it so many times when people get really close to tenants and they can't make the decisions that they need to make because they're so emotionally involved and attached to them. And that people don't reinvest in the maintenance and upkeep of their place. It's like, right, cool. It's a rental property. That's it. We'll do what we need to do. But it's really important from keeping up to market rents and keeping those yields up to speed. Doing that maintenance, making sure you have good tenants, because the bottom one really reinforces the top. Is that if you've got a nice house, you don't need to worry about getting tenants in. It's when you've got a dilapidated house and then you're trying to get tenants in. That's where the big repair bills come in, and that's where you don't get the same tenants as what you wanted. So from an effective standpoint, we want to analyze our financial data and reinvest in the property where it makes sense. So around that 10 to 15% return on investment is really important, rather than just throwing money into anything. And then adjusting rents regularly to align with current market rates. So it's one of the things that private landlords really struggle with, is keeping those market rents up to date because they're not in the market all the time. And it's a lot easier on your tenants if you're increasing, $10 or $20 a year, rather than going, jeepers, we're 3 years behind, I need to increase it $50 a week. So just keeping in mind with that. Maintaining a long-term perspective and focusing on the overall investment growth. So one of the things that we find a lot with people is everyone that they'll look at a property and assess it, but they'll just look at year one. Their spreadsheet will go year one. Here's where we're at the bottom. It's negative $2,000. It's a bad property. As opposed to looking out, it's like, what's this going to look like in 10 years? What is that going to give us? And is it worth, from an accumulated profit perspective, holding on to the property for that long? What's our equity position too? So, if we're buying a place and we're getting it $50,000 under market, and for the first 3 years it costs us $3,000 to hold, then it's going to take us a lot of time to make the $50,000 in equity that we made and cash flow. So it's really important just to balance that up, and then viewing each property as part of that broader investment portfolio. So when I buy this property, is it going to allow me to do step X and then step Y? And it comes back to strategy part at the start. So what's my strategy? What are the areas? What are the properties that I need to look at? And then each property forms a part of your next step of moving forward. and not being attached to that property. So when it's run its race, time to go, trade it in for another one that's going to be better performing. And the last one is employing professional property management team that can handle tenant relations and your property maintenance effectively. Even if you live in your own town, like for me, for example, we've got our house and then I've got another rental property that's about 500 meters away. I've got a separate property management company. Even though we've got our own, I've got a separate property management company that manages that particular house for the main thing of, like I talked about earlier, the tenants there are lovely, but I don't want to have an emotional attachment to them when I've got to go and make a decision about renovating the house or when the rent's got to go up. I'd rather leave that to the independent property manager who can go and do that, and they're there to help us and push us forward rather than me having to do it myself. And it's also too just a better use of personal time to get them to do it. Cool. So that wraps up the majority of the content for tonight. We've got sort of 15 minutes left. So if anyone's got any questions, fire them through there in the chat or the Q&A, and we can start having a bit of a look at them and see what we can help you guys out with.
Cool. At the same time as well, if you've got no questions, we would love your feedback. So if you want to kind of punch in one word you would describe, or actually probably a better question here is, what's been your one key takeaway from today's webinar? We would love to know, because we also get super passionate about this. Wherever it comes to property, we're in it. We just want to know, what did you take away? And then we can amplify that and share more of what we do. So yeah, that would be amazing just to hear from you. Hadley, what was your one takeaway?
My one takeaway. Well, I was the one presenting, so it makes it a little, and I knew what the content was, so it makes it a little bit more difficult. But I think it's just always helpful to go back through and just reiterate the facts of, what am I spending my money on? What's my return on investment? Is this a smart move? So yeah, Della said exemption. That exemption process, Della, is phenomenal. And if it wasn't for our builder, we wouldn't have known about it. So yeah, that's been one of the things that's super helpful. I don't know that all the councils do them, but it's just worth asking some questions to find out.
Cool. Also, Vivian asked inside the Q&A, council exemption, same deal. I guess everyone's kind of, takeaway is the exemption process. So yeah, I totally agree. I can kind of share my side of the story. I was part of the project management, so that was kind of my push for last year. I was at what do you call those clients that are unrealistic? It got towards Christmas, and I was like, I'm going to do this. I don't care. I'm going to get people. I'm going to get this garage converted. I don't care. So I was definitely the client who definitely was like, oh no, I'm definitely going to make this work. And thankfully, like Hadley keeps saying, build your trusted team. Our builder came over and he gave us that idea for an exemption. And I kind of didn't believe him. And to the point where I said, look, I'm not going to pay your invoice, mate, until this exemption comes through, because this needs to be legit. And that was important for us, because everything for us in a long-term game has to be legitimate, so that if we go to sell, it's legitimate. If we go to rent it out, it's legitimate. So yeah, that was super important for me. So again, exemption was actually the smoothest process I've ever kind of been through. It cut out so much time. Like Hadley said, we could have spent 3 months minimum with council getting this through, and I wanted to start this in Christmas. And my goal would have never kind of got there. So having that exemption timeline shortcut, and then also the budget on it shortcut. And yeah, here we are with the completed renovation. So it was super, super amazing.
Cool.
Yeah.
Yeah. Christina's asked, in terms of bedrooms, what type of property can yield higher gains, both rent and equity? So the political answer with that, Christina, is it depends. So the thing that you need to look at is that you need to look at your budget and where you can sort of afford to purchase. And then in those specific areas, you want to look at what each is renting for. So in terms of, if you look at a 2-bedroom and then you look at a 3-bedroom, and say a 2-bedroom's renting at $400 a week, a 3-bedroom's renting, in terms of if you go to tenancy services, a 2-bedroom's at $400, 3 bedrooms at 450, and 4 bedrooms at 550. You're better off to turn a 3 bedroom into a 4 bedroom because you're getting twice as much, per week as turning a 2 to a 3 as you are a 3 to a 4. But that's going to depend on sort of different markets and where that is. And then in terms of the equity side of things or growth over time. So 3-bedroom houses tend to grow at the same rate as 4-bedroom houses, as do 5-bedroom houses from a percentage perspective over time. When we're looking at growth, what we're going to be looking at is we ideally want a 3-bedroom house over a 4. And a couple of reasons for that. When we go to repaint it, there's one less bedroom to paint. When we go to recarpet it, there's one less bedroom to paint. We've got less exterior to paint. So our maintenance costs on a 3-bedroom home are cheaper than what they are at 4. But then at the same time, if we're looking to add another room in the existing footprint, then it comes down to a case of what's the demand like for the area, what's the layout of the house, and then how can we best execute that. Joe's also got in here. It's great not to overlook the simple cosmetic kitchen renovations. Yeah, 100%, Joe. The thing with that too is that the old kitchens from the 60s and 70s that were built out of proper wood, when you get water in them, they don't deteriorate like the Maltica ones do now. And although the stainless steel benches are the other thing that you want to look to keep, they might not be the most aesthetically pleasing thing, but if you have someone that takes a hot pot off the stove and puts them onto the stainless, nothing happens. But you have a Formica bench top, the hot pot comes off and onto that, and all of a sudden you've got marks and damage. So it's really about thinking outside the box. What's the best use of my money, and then how do I make this most fit for purpose and what I'm looking to achieve.
Amazing. Cool. Wicked. For everyone that's kind of asked those questions, we're so grateful and kind of given us your feedback. We will definitely use that and just keep on sharing. So again, if you want to dip your toe in the water, get to know what Hadley's like in a strategy session, this is really for those who are super keen and eager to grow their portfolio. This offer is only in on webinars. The special price at $297. Basically, if you're happy with the content that you got for today, then maybe the offer isn't for you, which is absolutely okay, because we just wanted to share our passion and knowledge. And then, those who are keen to grow their portfolio, then this here is a good stepping stone into investing in property and keeping that growth going. Amazing.
Cool. That seems to be all from the questions. So thanks very much everyone for tuning up. Appreciate it. And any queries or questions, just sing out and let us know.
Amazing. Thank you guys. See you.
Yeah.